Welcome everyone to this real life trading video. My name is Brad Reed and I am a real life trader. And I'd like to remind you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. Here at Real Life Trading, we've had a very common question, and that question is, how do I know if this company is making money? So a lot of times if people are going to invest over the long term, and maybe the long term could be 3 months to a year to 5 years to 20 years or whatever it is, how do we know if this is a sound company that's growing, that is able to pay dividends or can continue to pay dividends or might pay dividends in the future, or whatever type of investment return you are looking for, either growth in the stock price, dividends, both, or what have you? How do you know if it's financially a sound company? Well, an easy website to go to is finance.yahoo.com. And think about man, I hate it when politics comes up. Think about household name companies, companies that you know of, that everyone's heard of, that a lot of people, especially a lot of amateur investors, may be investing in. Apple, Google, Ford, GM, Panera, Starbucks, Macy's, Nordstrom, ExxonMobil, ConocoPhillips. What are those big name companies? Here I've got an advertisement for Marriott on here. Marriott's a great one. Wynn, Las Vegas Sands. These big companies that everyone's heard of. One of the biggest that everyone has heard of is Apple. So we can type in ticker for Apple, AAPL, and enter, and we get some information here on Apple. Now, one very interesting link that I like talking about is right here in the middle. It says financials. So let's click on this one that says financials. And if we're going to invest over the long term, we want a company that is profitable, that's making money. Up here, going left to right, we've got dates. The most recent date is to the left, so we can see year over year how this company is performing. And there's a couple of different categories in here. You need an MBA. Actually, I have an MBA and I still don't understand all of these. Well, let's see. I understand most of them. But if you want to know, is the company making money, the one you're looking for is way down here at the bottom. And it's going to be just net income. Net income is going to be money coming in minus all the expenses and all of the junk. So as we can see, Apple just recently posted an earnings statement. Let's see, what's the date? 9/24 of 2016. So that was a while back because it is currently June 1st, 2017. So about 10 months ago or whatever that is, they posted earnings of $45.6 billion. Now, some of y'all may be looking, that says, Brad, that's 45.6 million, but these numbers are in thousands. These numbers are in thousands. So 45.6 billion. A year before that, 53.4 billion. A year before that, 39.5 billion. So is it growing? Yeah, down last year over the year before, but hey, it's Apple, right? They're a big, strong company. They're making money. Interesting little chart over here. The green bars are revenue. That's the money that comes in, and earnings are what is left over. So earnings is I'm just going to call it profit, because for most people, when we say profit, that's what we're talking about. There's all different levels of profit on here. Gross profit is basically the money coming in minus the cost of generating sales. Then you have operating expenses, R&D, all that kind of stuff. Then you have operating income. So there's a bunch of different levels here, but net income is the one you're looking for if you want to know, is a company making money, yes or no? Now, interesting, I was talking about year over year. If we look at quarterly, we can see what has happened since that last yearly report. And so it looks like they spiked in December 31st. Wow, you mean a retail company like Apple had big sales over Christmas? Wow, surprising. Not. So yeah, Apple, big, strong, great company, looks great. So what we've been looking at is the income statement. You might also be interested, I'm going to switch it back to annual, in the balance sheet. Now, the balance sheet is basically going to talk about the assets that the company has, the debts that the company has, and the money that the company has. So stockholders' equity is the money and all the different categories that money lies in. Current liabilities are going to be all the debts that the company has, and current assets are going to be all of the things, the material objects that the company owns. You'll see short-term in here. The word short-term means things that that are going to pay off very quickly. Current also means things that are going to be paid off very quickly. Think less than a year. So we've got cash, short-term investments, which means are investments that should develop or mature very, very quickly. Net receivables, that's money that is owed to the company that should come in the next couple of weeks to months. And current assets are things that can be sold quickly to generate cash for the company if they need it. So if you see current or if you see short-term, think that's what the company has. So total current assets are 106.8 or 0.9 billion. So one thing a lot of people like to say, hey, what about the current assets versus the current debt? So liabilities is debt. If I come down here to total current liabilities, that means short-term debt. I see 79 billion. So 107 billion up here is bigger than 79 billion. So the company has enough money coming in the next couple of weeks or months to pay all of the debts that'll be due in a couple of weeks or months. That's a good thing. You can also look at total assets here of 321.686, whatever, call it 322 billion. And you look at total liabilities or total debts of 193 billion. You see that Apple has a lot more assets than it has debt. That's a good thing. And then, of course, you can also see net tangible assets down here. These are, of course, all the different money type categories. So all of this is to say, hey, Apple looks like a pretty profitable company, looks pretty solid. So let's look at a company that is not always solid. I'm going to pull up Twitter, TWTR. And now we're looking at Twitter. Here's financials. Let's go back to the income statement. And my computer has switched over. We're looking at annual. We see it does have gross profit. So the revenue coming in is greater than the cost of sales, to the cost to generate those sales. But when we look all the way down here at net income, Twitter is posting losses of, is this one in thousands too? All numbers in thousands. 457 billion, no, excuse me, $457 million in losses last year, 521 million the year before that, 578 million the year before that. You can see the chart here. They do bring in money, which is good, but after all of their expenses, after all of their, what do they spend money on? Research and development, selling in general, looks like marketing. After all of that stuff, they post losses year after year after year. So Twitter may not be one of those companies that you want to invest in long-term right now. If we look at their balance sheet, we see their total assets are 6.8 billion. We see their total debt is only 2 billion, but we see their retained earnings is negative. That's not a good thing. Their tangible assets are pretty low. So the company, you know, Twitter's a very popular name. They may be growing, but as far as a long-term investment based on this income statement, I would wait until they start posting some gains. Now, if you're looking for high risk, high reward trades, maybe you do want Twitter now. You know, the stock, if they do start posting positive net income, you know that stock price is going to go up. I take that back. You don't know it. It's likely to, as a stock trader would say. But here are the income statement and balance sheet. Here's a free way to look at it, finance.yahoo.com. Click around. Before I turn it back over to Jeremy, just wanted to remind you, it's good to look at several different companies in an industry, because sometimes industries as a whole have different income statements than other industries. For instance, if you're looking at Ford or General Motors, their income statements and their balance sheets are going to look much, much different than technology companies like Apple, IBM, Twitter, Facebook, that type stuff. So be sure you compare whatever company you are interested in to others in the industry. And so fundamentals like this, looking at financial statements, are great to describe or to identify what companies you want to invest in. Technical analysis, which Jeremy's going to talk about next, is a great way to describe or to identify when you want to invest in those companies. So thanks for watching this video, And until I get to talk to you again, trade on logic, not on hope.